Good morning. This is Mayor Valensky with Driving Markets. Let's look at what action happened yesterday and what's going to be driving markets today. Yesterday, everything was quiet. There was not really much happening until Elon Musk, CEO of Tesla, went and bought 9.2% of Twitter. Now, you have to understand, Elon Musk at the moment has 80 million followers on Twitter, and he's been a major critic. He has been a follower but a critic of Twitter, saying that they don't allow free speech and they need to improve their service. So what's likely to happen is he's now become a 9.2% shareholder. The likelihood is they might even take over Twitter. Yes, Elon Musk may even take over Twitter and completely change the platform. This sent Twitter shares up 27% yesterday, up to $50 a share. Also had a big impact on all of the other NASDAQ shares, including Meta, Facebook, Google, Salesforce, Amazon, Snapchat, Instagram. The whole lot just shot up yesterday on the basis of Elon Musk buying 9.2%. The social media platforms were up more than 2 and 3% yesterday on the back of his action in buying those shares. What's likely to happen to go forward is that Twitter will now become a major competitor. Remember, Twitter's always been deemed as the poor neighbor of the social media. It's always been lacking behind all of the others and now could become a leader simply because Elon Musk, being dynamic and one of the best CEOs that I, in my opinion, think there is likely to take that company to a different stratosphere. Keep an eye on Twitter. What else happened yesterday? Again, the treasuries, the 10-year treasury and the 2-year treasury became inverted. Very, very bad and worrying sign. On the back of what? Well, you've got the 2-year treasury running at 2.46% yield. That is the return that you'll get if you were to invest in it. And the 10-year treasury was running at 2.37. So it was lower. Whenever you have a higher 2-year treasury and a lower 10-year treasury, then that is a sign of recession. But remember, I said it yesterday and I'll say it again, it has to continuously happen for 90 days. And then it's practically 100% certain there'll be recession. It has not happened for 90 days. It's happened once, twice, 3 times, but it's not happening every day. But keep an eye on the 2-year treasury. Keep an eye on the 10-year treasury. It's a good indicator as to where we're going. Oil, but once again, went back up yesterday. Remember, I've been saying that the release of the emergency reserves by Joe Biden, the Europeans, and other countries will not keep oil down. Oil will go back up to $150 and even higher. Be aware of that. I'm giving you an advance warning on driving markets. Oil will go back up above $150 a barrel. The short-term remedy of releasing the strategic reserves is not going to solve the supply problem with oil, especially with Russia and Ukraine going on. It's likely to go on for at least another 2 or 3 months. So it'll have a big impact on soft grains, on wheat, barley, it'll have soya, on corn, and also have an impact on oil because they are the 2 of the biggest producers of energies in the world. Also, remember that Germany now has to pay for all of its oil. The Europeans have to pay for all of its oil and gas from Russia in rubles. That will also have a big impact on the ruble. Keep an eye on that. That's something to watch going forward. What else do we have? We've got cryptos. Cryptos came off slightly yesterday and bounced back. So Bitcoin's running at about the $46,000, $47,000 level. It's going to break out at some stage, either break for the down, which I think is unlikely, or more likely break out to the up. I think that you're looking at testing the $68,000 level on Bitcoin. You also got some dollar strength in the market on the back of rising interest rates. Look at what James Dimon said, on the CEO of JP Morgan. He said that this year there's going to be significant challenges geopolitically, which I said, and financially, economically. He's calling for more aggressive interest rate rises, which I called for already back in November. And the CEO of JP Morgan is now calling for more aggressive interest rate rises in order to combat inflation in the States and globally. So we're probably likely to see interest rates rise aggressively throughout the rest of the year, could exceed 4.5%, 5%. In my opinion, I think that's where we're going. Make a note. Mayor Zelensky says we're going to 4.5 to 5% interest rates, not 2.5 or 3%. Something to keep an eye on. If we do get there and there are any shocks in the marketplace, then you're going to have a significant impact on the Nasdaq downwards. Remember, the Nasdaq is a speculative index. It's based on high risk. If interest rates go up, the Nasdaq's going to go down. At the moment, the market looks like it's absorbed all of what's needed in regards economic and geopolitical news. However, any further shocks, whether geopolitical or whether on an economic basis, will send the markets down. At the moment, they're stable, but the trend is down. Be aware of that. Let's see where it goes. That's all for today. You can contact me on WhatsApp. I've got Instagram. On YouTube, you can comment. You can send me any particular message on LinkedIn. This is Mayor Zelensky with Driving Markets. Have a good day. Watch Elon Musk. Watch Twitter. Watch Tesla. All the best.